Hey guys, welcome back. Hope you had a good Thursday in the market. We're gonna look at some technical analysis, some options. I've moved my position around on GME to set up for just a little better risk management. Sub up, like up, comment down. Happy money sticks around. We have Twitter you can follow us on at Happy Money YT, as well as a Discord server. Link for that is in the description. Free to join, welcome to jump on there. Looks like GameStop's coming down a little bit. SPY had a pretty big bounce today. It opened down like 1.5%. Now it's kind of climbing back up. CPI was 7.9%, which is terrible, but I think it was maybe better than expectations. So market's kind of just consolidating, trading in a range, looks like, before maybe its next leg down. Looks like the e-bike kind of e-mobility stuff's been running lately. I'm not sure if this is from more of a macro economic deal or what, but yeah, we have Hellbiz. Oh, that's not it. Hellbiz, EasyGo, Vulcan, Birds is on there too. So not sure if it's from oil prices going up or what's causing these to go. Birds has its earnings coming on Tuesday. Got a pretty big position on there somehow. GameStop didn't repeat this price action from this day, so it did deviate from this. We didn't get this was a little bit of a gap up and then just basically a strong rally day, about 16%. So as far as these days copying, it looked like it was, but today not so much. Not to say that we aren't potentially still at the end of a trough before a rally, like here, or here, or here. The price action just doesn't look the same as it did in March. This would be the first test, the peak, and the second test. It's either that cycle and that spot in the cycle that we are, or this was our pinch and our trough was right here. The low, the peak, the retest, and then the pinch, and now we're on our way down, shorting into earnings, which would put us about here. So the peak on the pinch, and then the short into earnings. So here's the little pinch, shorting into earnings. Not as much that time. This time it was the day of. Couple of times the peak was a couple weeks before earnings, then it was shorted into earnings before it kept going down more. So either one of those spots, or it's possible we're not following that same pattern anymore, and then I would just say that the TA on it's bearish still on the daily time frame. Got red under the 9, bearish MACD. Not looking at previous price action. Basically, I would just see for it to hold this support. If it does, otherwise, if it breaks through here, I see us probably coming down for a ride. Down probably to that 45 or so range, the previous support back here. But I'm anticipating good earnings. Whether it beats expectations or not, I don't know. And whether that causes positive price action, there's no way to know. You could beat expectations and have a good earnings and still get dumped on. So it's possible with all this shorting they've done, given they had a little tick of timeout in the middle here, and Citadel got almost 2 billion cash infusion to carry on. With all of this and not hardly any covering like we've had each quarter this year, it seems like there's a lot of covering that they still have to do, and maybe this time it will just happen through earnings or after earnings. Quite possible. If this is this kind of second retest of the low on the trough, then we'll probably just repeat this cycle, the pinch, and through earnings. Maybe it'll dump after earnings quickly, but then rebound and continue on with the upward trajectory back up to maybe a 250 or so price target. Or maybe we'll consolidate into earnings. On the shorter time frame, it's also flipped bearish today, and this is when I flip my position. My shares on margin. I didn't want to hold if it continued to go down, because I would just get margin called and have to just keep feeding the beast with money I don't have to feed it. So I closed those. This is pretty bearish looking. Big red under the 9, basically a bear flag with bearish MACD. That said, I do have to just see kind of what it does here, because these wicks are kind of holding the support, but it's looking bearish still. So if it starts breaking through here, then yeah, this probably isn't the end of this probably isn't a second test on the trough before a pinch. We're just maybe out of the cycle altogether. But the fact that it has been pushed down so much with not really any covering taking place, we might have our rip from earnings on, from good news at earnings, hopefully, and NFT marketplace, maybe a dividend. I don't know. GameStop did announce their earnings only 10 days before. So they announced it on the 7th for an earnings call on the 17th, which is a very short amount of time. Typically they'd give at least 3 weeks, maybe a month of time, which is bullish, as well as they're required to give the brokerages, the banks, whoever, 10 days of time before they offer dividend. So they don't have to tell the public necessarily. They can wait until earnings if they are going to do that. But I think at this point, if they are going to do it by earnings, the brokerages know. So possibly why he did it 10 days, not sure. But yeah, that's what we got. My buying power on E-Trade has just been obliterated. I guess because GameStop just keeps coming down. I don't know. I didn't buy anything on margin on here because you can't get margin. So I'm confused by that, but it doesn't matter. I did open up a put debit spread on GameStop once we flipped bearish. I did a 92.97 put debit spread for next Friday. So this covers earnings also, which they might short it down after earnings for a bit. And that'll give me a little downside exposure. Clove, I closed that Zebra, which was profitable. I saw it coming down on the hourly, so got out of it. And here is the put debit spread. Only positions I did on here. Yeah, that's all I did on there. And then on my long term, I have margin. I flipped, so I had the shares on here. I closed them, took it was like a $9,000 loss on the shares, just because I bought them at about 120, expecting that to be the beginning of the pinch, and it's come down, and I don't have enough margin to carry this position if we drop really. I'm like right on the edge of it, so I had to close that out, and I used the margin then to open up short puts. So I started with these ones for Friday, 95 strike, and if GME does keep coming down, I'm hoping to just basically ride down the short puts just out of reach of where it expires each week. I'll probably just stick with like the 20 delta, which is what this 95 was. And then my plan is, if GME starts to rip, it looks like there's covering or the squeeze is starting, I will just buy to close this and put this back into shares. So that's kind of the plan. The only way that it won't work is if a lot of it happens after hours, and that's kind of the risk I have to take with the position on that brokerage, just because it is on margin, as well as some of that's actually from a loan. So my risk management for that, I couldn't really afford just to hold shares if it's going to keep going down, and I can't. Holding shares overnight and after hours, that'll be great if it rips after hours. For the short put, I can't close that until market opens. So basically, if GameStop goes up to 200 after hours, I have to wait until market opens to close a short put. Yeah, I'll basically be max gain on it, but I can't buy shares until I close those puts, because all my margin is tied up in those short puts. So that's the only way that I would kind of lose on some of there's some opportunity cost there basically. So we'll see. If it starts to happen during the day, that'd be great. Then I can close a short put, get my margin back, buy shares. Happens after hours, I'll probably close my put the next day, see what happens. If it continues, then I'll probably just buy whatever shares I can with what I have at that point. That's all in my long-term account. Doing on my long-term just because that's where I can get margin on GME. Trading, I've got plenty of exposure. I haven't sold anything. I have shares on here as well. Stuff for this week is going to be dead, most likely, unless we have a big rally, which sucks, but that is probably it's going to happen. And then we've got for next Friday, so here's a bearish one, then I've got this put credit spread. This is kind of a big put credit spread that I need 136 buy for break even, but since I've rolled it I think twice, I probably need more than that. So I'm hopefully that works out, because I probably can't roll this one again. I don't have enough, I'm not gonna have enough margin on this account to roll this put credit spread again, so I'll have to eat that loss. But then end of the month we have 215 calls, 160 calls, 145 220 call debit spread, and then 130 250 call debit spread for April 1st. I opened up the April 1st one yesterday just because looking at if we were at this spot, which I thought we could have been, then that was about 30 days, so I wanted exposure into the first expiration in April. And again, we still could be at the end of this trough. We'll see. Maybe the cycles, maybe they've altered the way they are. Maybe we're still in it. Really don't know. But with how much they've shorted it down here, and with also all the external factors going on with inflation, 7.9, this war, oil pricing, and just the whole market being very unstable and getting volatile, I could see the squeeze really starting. Really, probably when we least expect it. Maybe it'll be from earnings, maybe it'll just be from a random hedge fund getting liquidated that we don't even know about, and we just start seeing GME ripping. Let's check out for you guys. We'll see you on Discord. Peace out.